All right, from macro, we go to micro, although it's a big micro, I guess you could argue. Tesla is what we're talking about. The stock is down ahead of the opening bell. That's after the company said it delivered more than 343,000 vehicles in the third quarter. That, however, while a record, was below forecast. Let's bring in Oppenheimer Senior Research Analyst Colin Rusch to discuss this a bit further here. Now, the company produced more vehicles, but it talked about the high cost of getting them to people who wanted them, Colin. So how negative do you view this, if at all?
This is just a growing pain as far as we're concerned. So what's going on is the company's effectively doubling capacity and, doubling the number of factories that they're selling out of. And so they're going through a shift in terms of the logistics on getting those vehicles out to folks, as well as the delivery schedules. They've been very tailored and focused in terms of geographies where they were selling vehicles and kind of shifting that around from geography to geography. Now that they're going to have 4 factories rather than 2, it allows them to have a more broad-based delivery system that's more equitable and really simplifies their system in terms of where they're sending things. And I think they're just going through that transition right now. The production number is what we're really concerned about, and that number came in at a pretty healthy clip. Obviously there's a ton going on in the supply chain right now, and to see that number come in at 365 was actually encouraging for us.
Okay, and so, it's continued focus on the 3 and the why. Is there any kind of clear insight that we have right now on how many of the vehicles that are being produced, especially in the 3 and the Y, are actually upgrades or higher kind of packages on those 3 and Y vehicles, considering the 3 was a mass market and ultimately the investors still want to see a solid kind of profit margin. And so what is the health of the number of people that are purchasing into the higher packages for 3 from what
I think the thing that we look at most consistently is the lead times. And so if you go and look at how long those lead times are, it's somewhere between 6 and 8 months right now for a custom vehicle. And certainly what we're seeing on the pricing front is that the low-end vehicles are selling around $60,000 or a little bit higher. That's up almost 25% from where they originally had been pricing. And so we're continuing to see Tesla move prices higher, pass on some of their supply chain costs, and certainly the uptake on the higher end features has been very strong. We'll get a real read on that when they report earnings, and certainly we think the margin numbers is what is really going to be a big concern for investors. But so far what we've seen is pricing continues to creep higher. They're passing on all of their costs, and they're managing the supply chain far more effectively than a lot of peers.
Does Tesla have a demand problem?
I don't think so. What we've seen, across the board is that this transition into producing EVs is very, very difficult. We've seen it with a lot of the established OEMs. We're seeing it right now with some of the newer entrants into the space. But what we've seen is that these vehicles and the EVs continue to have a depth of demand, particularly as we see energy prices remain at elevated levels. We think the total cost of ownership advantage for an EV is around $15,000 to $16,000, and that's looking at maintenance savings as well as fuel savings. And so the net benefit to consumers, even if you look at some of the higher prices, is still pretty substantial. And as we go into a recession, certainly folks are looking at some different ways to feel comfort. And this is an area where they can feel excited about their car without having to spend a gross amount of money to get to that sort of experience.
Well, you can even spend less amounts of money than getting a Tesla, right, Colin? So I'm curious, as you look at the new entrants, and some of them are not so new, as you look at the competitive landscape right now, obviously you think Tesla's holding its own. Do you think that will continue, or do you think we're going to see more nibbling away at its market share?
There's a transformation for the entire transportation market as well as the power market, and we're seeing everyone and their brother get into the space in terms of the EVs. But what we're seeing on the product side, really the only products that we're seeing that really compete with Tesla from a performance and a price perspective are really on the very, very high end. And certainly Tesla has some structural cost advantages as you move into the mid-range and even the low range on these vehicles. And so for us, we're not seeing that competitive dynamic really be an issue. It's really around collectively bringing consumers down the road on EV evaluation. And when they look into the specs on these vehicles, Tesla continues to outpace their peers pretty substantially, and we see that advantages 3 years plus right now.
How do Optimus robots, Colin, change Tesla's financial future?
It was an interesting session that they had on Friday, and there's a couple of things that we think are really important. So, one, the robots are way down the line, and certainly if they're talking about 3 to 5 years, they could be much longer than that in terms of when we see that in a real way. What we're so excited about is the learning cycles that we're seeing the company execute on the AI side, and in the Dojo product or the Dojo system that they've got, where they're accelerating a lot of the learning, doing some automated tagging on their autonomous side. That is really a meaningful set of progress that we saw from them on Friday. And so that's where I think the real value is. If they start, letting other folks use that could be a couple $2 billion worth of revenue at fairly high margin for these guys. But I think the important part is them moving down the road on the technology development. And we saw them, demonstrate an awful lot of sophisticated subsystem behavior on the autonomous program. And so I'm not really concerned about this robot thing, although I think it's helping them from a recruiting perspective, but I don't think it's really meaningful for them from a financial perspective for a number of years.
All right, well, Boston Dynamics Atlas robots are already doing parkour and Fortnite dances, so this humanoid robot from Tesla has a lot of work to do to catch up. Colin Rusch, who is the Oppenheimer Sr. Research Analyst. Colin, great to have you here with us this morning. Thanks for taking the time.